Hi guys, it's Duro-Fadipe here, SDF if you will, and I'm delighted again to come your way today. I know it's been a long time coming. I've been away for, I think I've even lost count myself. I know it's quite a while, yeah. So I've missed every single person here, okay. And I had a few challenges, but of course that's behind us now. Uh, well, I got my previous account got banned for a reason I do not know. Okay, and I've tried to appeal, but it seems like my appeal was falling on deaf ears. Okay, so while we still wait for the appeal, I'm going to try to share my content with you guys right here, if that's okay. All right, and that's it. I'm just going to try to share. I've missed everyone. I've been itching to share some of my new discoveries and everything. So, but it's really cool to finally come your way. Okay, so today basically I'm going to do more of a refresher. Well, we can call it a refresher because it's something I know I've touched on a few times in the past. But the good thing today is I just want to show you some things. Okay, remember the money you want to print is right on your charts. Okay, yes, indicators are cool. You can use them, especially when you know how to use them properly. You can you can have a whole lot of benefits from it. All right, but of course, what indicators try to do is try to mimic price action. They try to do what they try to make a meaning of what price is doing. All right, which means that it's going to have to take that information and try to interpret it before it now tries to give you a graphical or a pictorial representation through those things you see on your demo, which means if you can actually learn price action, you can pick those signals earlier than your indicators will show them. That's what it means, because the indicator has to make a meaning of what is happening before it gives you any indication. You get what I'm saying? So if you are able to actually pick those things as they are happening in real time, then you might be might be a few steps ahead of your indicator. All right, so finally when the indicator comes up with it, it's just going to be a kind of confirmation or kind of confluence. Okay, so that's what it is. And today basically I just want to show you there's a simple approach to the market. All right, now this is crash 500, and basically what's the first thing? What do I have on this indicator? What do I have on this? This is my chart, right? So what do I have on this? I have a zigzag, basically just showing this particular one, just showing me the highs and the lows. Okay, then of course this is the SR indicator, basically just showing me the support and resistance. Okay, sometimes I like to do it. Sometimes I draw the uh, support and resistance. I do it manually, but I think from over a period of time, I've come to realize that this indicator actually also does wonders. It's marking up support and resistance. So basically, what are you going to do? I just want to show you a simple way to just make an entry and come out of the market, with a level of confidence. Okay, so first you want to check your daily. If you're checking your daily, see what's happening on our daily time frame as it is. Look at our daily right now. This is an look at this. Look at this here. This right here gave us this made a high. See, it finally came down to support, right? Now, when it came down to support, it came back to test that zone as resistance, as you can see, but it tested it as resistance. But now it gave us double top. It gave us what we call a double top, right? Now, a double top in the sense that this has failed to make a new high. It has failed to make a new high, which means this old high is still holding, okay, as resistance. So price has failed to, and look at the rejection we got right here. We got a bearish pin bar. All right, and this is a daily time frame. We got a bearish pin bar. All right, another thing I'm going to add to this, just for ease, is I'm going to add moving average 21 exponential, so we can use that to determine the trend. Of course, so when price is below this, we can clearly say that it's a downtrend. When price is above it, we say it's an uptrend. Now, of course, Price has come here to test this zone. It has fallen below it, and of course this was the close of yesterday's candle. This is a daily time frame, which means that this candle closed below moving average 21, moving average 200 exponential yesterday. Okay, so what am I going to be expecting today? Based on what I have seen on the daily time frame, I'm going to be expecting price to sell a lot. I'm going to be expecting a lot of sell today. All right, first, this is a bearish divergence happening at a key level of resistance. Sorry, here is a bearish pin bar happening at a key level of resistance. See all of this rejection. Higher prices have been rejected, right? So I'm going to be expecting price. I'm going to be expecting a lot of sell today. So it closed below this. Now it's still right below this, and of course, it's if you drill down to H4, we're going to see what price is actually doing. Now, look at it right here. Look at it right here. That's the same trend that was giving us this. Okay, after this old movement, it couldn't. It was coming. That was the same eye. This is the same eye we pointed out, but it came around there. Remember, this should be taken as a zone. I say this every time. Okay, it shouldn't be taken as a straight line, but as a zone. So price actually came to this zone, and of course we got a rejection. The rejection led to what is this? It gave us a tweezer top, right? And the tweezer top is an indication that price is about to move the other way. So we've got this tweezer top where price was at resistance, right? And of course, after this tweezer top, and it's a tweezer top. Is it? It's actually a tweezer top. Well, it really doesn't matter really. All you need to know is what the candle carries, the information it carries. Doesn't matter whether you know the names or something. I know that's so important for you to know the information it carries. Now, the information this carries is that this could also be seen as a bullish, as a bearish engulfing, because here is a bearish candle engulfing the previous bullish candle, engulfing the range of it. Okay, so as you can see clearly, this is an indication that the momentum is on the bearish side. Okay, and so price went all the way, and now it's still going to be selling. Okay, now this we still expect that it's going to sell some more. All right, but if I was going to take this, and I'm going to kind of do this, if I wanted to take it on the H4, I'm going to mark this zone. This is a key level. I'm going to mark this zone. This is a key level, right? I'm going to mark this zone. This is a key level. I'm going to mark this zone, and I'm going to at least expect price to come to this zone. Okay, I'm going to use this one and take profit. Okay, that's if you're taking it on H4. But if you're doing down to H1, let's see what H1 is doing. This is it on H1. This is the same rejection we saw on H4, leading to all of this. So if you actually took this trade on H1, you probably would have taken profit at this point. Okay, because this point is support. So you would have taken your profit at this point. Why? Here is we're having a bearish pin bar, correct? We're having a bearish pin bar happening at resistance, and of course you could have taken it all the way to the key level, all right, which is the new support. Okay, now here is another key level. Here is another key level. Of course, here is resistance, but of course the momentum was strong. It broke through it and it came for the next key level. All right, so on 15 minutes, which is where I advise a lot of guys in my inner circle to pick their trades from, even if you're not going to do a long time, but still pick it from 15 minutes so that you can better time your entry. Here is still that same rejection we saw. All right, so after this rejection of this zone leading to a bearish engulfing, you could have entered this trade right here. And of course, remember your zones are supposed to be marked already. So if you're using key levels on 15 minutes, that for those that are maybe risk averse and people that don't want to hold on to trades for too long, then you may want to use the key levels on your 15 minutes as take profit. So if you took your profit here, you would have taken profit at this zone. But if you went further down, of course, this is another key level. You could have taken profit on this one. This is another key level. You could have taken it on this one. And finally, this is another key zone. You could have also taken profit at this zone, all for a sell. Okay, but right now price is taking a breather. What do we have now? Price is taking a breather, as you can see it. It's giving us it's ranging. We have a ranging market now, but look at this. This is the pole, right? This is a bearish pole, giving us a pennant. Okay, this is ranging, price ranging right here. Okay, but it looks like this range has been broken. Okay, if this range is broken, you expect a retest of the lower. Okay, this is what I'm talking about. Here we have a kind of range, right? Here we have a range. So in this range, what are we going to expect? It looks like we're going to expect it to break out. After breaking out, we expect it to retest this lower line. Then we expect it to continue in the direction of this bearish pole. Here is the bearish pole. Okay, here is the bearish pole, and what we have here, of course, is a bearish flag. Okay, a bearish flag is an indication that price will go back in the into the continuation in the direction of the bearish trend. All right, so that's what we expect. Yeah, so we're still going to expect it to maybe sell further. That's if it breaks this range, it comes back to retest here, and we're going to expect it to go further down. And if it goes further down, of course, this is 15 minutes. You can then use your H1 support. That's it. We just go with spike. Now it goes, we expect it to go further down to the next key level, probably on H1. Okay, so if you check the next key level on H1, this is it. So I'm going to expect it to at least come back to get here, at least. Okay, I'm going to expect it, and this is on H1. So if it breaks out of this, I will expect for it to get to this point. And when it gets to this point, I'm going to take partial profit. And after taking partial profit, then I can leave it to run up until the next key level. I hope that makes sense. I hope it wasn't too, too technical or too advanced. I don't think it's so advanced, but I think if you have followed me, then you'll be able to at least relate with this message. Okay, so this is more like a refresher video, just a video to tell you that I'm back. And of course, this is me, SDF. If you'll be wondering or trying to find me, well, this is where you're going to find me now, the Indices Snipers YouTube channel. So please go ahead and subscribe to this channel, and I'm going to ensure that I feed you with lots and lots of valuable content like this one. Okay, I will not let you down. You know how I do it. I will make sure I bring it to you just the way it is. All right, thanks a lot for paying attention to this one, and I hope to see you on the next one. Cheers.